Welcome back to the deep dive. Today we're going to be, doing a deep dive into leveraged investing in U.S. stocks, and this one is really customized for you, the listener. We're going to be looking at this subscriber-only report called "Mastering the Power of Leverage," and we're going to try to extract the juiciest bits, the things you really need to know. And the best part is you don't need a finance degree to follow along.
Yeah,
Yeah.
it's true. Think of us as your, I guess, financial translators.
Yes.
We take that complex jargon and we turn it into knowledge that you can actually use. And we'll be focusing on things like short-term trading strategies and risk management and even some kind of advanced tactics, for those listeners who are feeling a little bit adventurous.
Ooh, adventurous. I like that. And we love a good story here on the deep dive, right? So we'll be sure to sprinkle in real-world examples and fascinating comparisons from the report to really help make this knowledge stick. Ready to level up your investing game.
Let's do it.
All right, so first things first. This report really emphasizes this idea that we need different approaches for short-term versus long-term leverage plays. So why is that so important?
Well, you got to think about it this way. Short-term trading, that's all about riding momentum and capitalizing on those quick price swings. But long-term investing, that's more about, that steady growth, those compounding returns over time. So leverage can supercharge both, but it requires a different mindset and strategy depending on what your goal is.
Yeah.
What are you actually trying to do with this leverage?
Okay. Yeah, that makes sense. And something that really stood out to me in the report was they focus on the psychological side of using leverage. They highlight this really fascinating study comparing two groups of investors. One group goes all in with 100% leverage. The other one uses a 50-50 split. So half of their money is in a 2x leverage ETF, and then the other half is just in cash.
Yeah. It's amazing. That study is just such a great example of how even having just a little bit of cash can make you a much calmer investor.
Mm.
You're thinking more strategically. It's like that group with that cash buffer, they could ride out those ups and downs. They can think clearly and ultimately make better decisions.
Yeah, it's wild how emotions can play such a big role, even when we think we're being totally rational, especially when you're dealing with leveraged investments.
For sure. Absolutely. Emotions.
Yeah.
That's why risk management is so critical. And the report gives us like this solid four-step framework.
Yeah.
So if you're picking stocks when using leverage, it all starts with capital flows. Basically, how much money is actually moving in and out of a particular stock.
Yeah.
You got to be able to get in and get out.
Right. Makes sense. You need to be able to buy and sell easily. So what's next? What comes after that?
Yeah. So after that, we look at the narrative. Like, is there a compelling story behind this stock? What's the overall buzz? What's the sentiment? What's driving investor interest? It's not just about the numbers. It's about understanding the story behind those numbers.
Okay, so it's like a blend of like the quantitative, the numbers, and the qualitative, like the story. I see. Okay, what about step number 3?
Step number 3, then it's time to dive into the fundamentals. The classic stuff, economic cycle, industry trends, profitability, all those key factors that can tell us if a company's, actually healthy.
Yeah.
Are they really positioned for growth? Or is this all just hype?
Right. Okay.
Yeah.
So we've checked the flow, the story, the fundamentals. What's the final piece of the puzzle? What are we missing here?
Last but definitely not least is the technicals, right? So using charts and indicators to try to pinpoint the best entry and exit points. And the report makes a really key point here. It's choosing stocks in sectors that are already, trending upwards for the year. It's like catching a wave, right? You want to ride that momentum along with those big institutional investors.
I like that. Okay, so flow, narrative, fundamentals, technicals. That's a super helpful framework. I got to ask about this husband analogy. I was reading the report, and they use this husband analogy to explain the difference between leveraged stocks and leveraged ETFs. What is that about?
Oh, right. Isn't that a great analogy? I thought so too. They compare it to like choosing between two potential husbands. One's got a really high income, but he spends it pretty lavishly, and then the other one earns less, but saves diligently. And over time, that difference in their wealth becomes pretty obvious, right?
Okay, but hold on. I'm a little confused about how that applies to leveraged stocks versus ETFs. Can you break that down for me?
Yeah, for sure. So leveraged index ETFs, like SSO or QLD, those are like the husband who steadily saves. they benefit from the long-term upward trend of the underlying index,
Yeah.
which helps to offset something called volatility decay, which can really eat away at your returns over time. Leveraged stocks, on the other hand, those are more like, the high roller husband. They lack that consistent upward bias, making them susceptible to that volatility decay, eating into your profits.
Okay, so if I'm hearing you right, leveraged stocks are more of a short-term play, and then leveraged index ETFs can be used for both, like short and long-term strategies.
Yeah, you got it. That's a great way to put it. And speaking of those short-term plays, let's talk about timing those entries into leveraged stock positions. The report advises waiting for a really strong upward trend before jumping in.
Interesting. So it's not just about finding a stock that, that seems undervalued. There's more to it than that.
Right, exactly. You don't want to, you don't just want to jump in. You want to see the momentum is already building.
Okay.
You should look for those technical indicators like, breaking those resistance levels. That's a pretty good sign that a stock is really ready to move higher. The report even suggests, starting with half of your position in just the regular stock, and then, only adding those leveraged shares once you actually see like a 5% gain, just to confirm the trend is really there.
Clever way to test the waters, I guess, before going full throttle. But of course, leverage also means more risk, right? So how do we manage that potential downside?
That's where setting, those really clear stop loss and profit targets comes in. You got to know when to get out. And the report, it stresses how important it is to just plan your exit points beforehand, and always calculate your risk-reward ratio before you even enter a trade. Don't let your emotions, drive your decisions when things start to get a little bumpy.
Totally. It's all about, having a plan and sticking to it, no matter how exciting things get or how scary. We've talked a bit about individual stocks, but the report also dives into leveraged ETFs. So what's the deal with those?
Yeah, so those leverage ETFs, they offer a way to really amplify your exposure to specific sectors or specific groups of stocks. And we have, two main categories: strategic leveraged ETFs and tactical leveraged ETFs.
Okay, that sounds interesting. So let's dig a little deeper into each of those. Let's start with strategic leveraged ETF.
Sure. So these ETFs, they're designed to capitalize on those short-term trends within specific sectors, but without having to pick individual stocks. And the report recommends using something called the Merrill Lynch clock, to identify which sectors are likely to outperform in the current economic cycle.
So instead of betting on one single tech stock, for example, I could get exposure to the whole sector, but with added leverage.
Exactly. So, if the tech sector is, if it's looking strong, you might consider ROM, which is the 2x leverage version of the XLK ETF, which holds all those, top performers like NVDA and MSFT and APL. So you're amplifying the potential for gains.
Gotcha. Okay, so that's strategic leveraged ETFs. What about the tactical ones? How are those different?
Yeah. So think of those tactical leveraged ETFs as, even more focused, even more short-term. They're designed for those really quick trading cycles. They ride the momentum of specific, often, really high-growth companies. A good example from the report is FNG, which tracks the FNG stocks.
Okay, so we've got leveraged stocks, strategic leveraged ETFs, and tactical leveraged ETFs. I'm starting to feel a little overwhelmed. But don't worry, we'll guide you through it. For those adrenaline junkies out there, the report throws in an advanced strategy. It's combining those leveraged ETFs with options.
Now, this is where things get really interesting. But remember, with higher potential reward usually comes higher risk. This approach is really, for those listeners who are already experienced option traders, they understand those nuances involved. They know what they're doing.
The report actually uses AMD as an example. They suggest buying a long call option on AMDL, which is the 2x leveraged version of AMD. So can you walk us through that a bit?
Yeah, sure. So they recommend choosing what's called an in-the-money option. Basically, it means that that the option's strike price is already below the current price of AMDL.
Yeah.
So it gives you more leverage from the start. And they also suggest looking for a delta of at least 0.7.
Hold on, Delta. Can you explain that? Like, I'm 5. I'm not sure I follow you there.
Sure. Yeah. Delta basically just tells you how much an options price is likely to move for every dollar change in the underlying asset. So a delta of 0.7 means that for every dollar increase in the price of AMDL, the options value should increase by about 70 cents. It's like a measure of how closely the options price tracks the price of AMDL.
Okay. I think I got it. So we're looking for an option that's that's already in a good position and is very sensitive to changes in the price of AMD.
Yeah, actually.
Yeah.
And as for the expiration date, they suggest going for something around a year out. It gives the trade enough time to work without losing too much value to something called time decay.
Wait. Can we back up for a second? Can you unpack time decay for me? I'm a little lost there.
Yeah. Oh, sure. Absolutely. So time decay is, it's a really important concept with options. Basically, as an option gets closer to its expiration date, it loses value, right? Because there's less time for the underlying asset to move in a favorable direction. It's kind of like an ice cube melting,
Yeah.
The closer it gets to melting completely, the less value it has.
Okay, that's a good analogy. I get it now.
Yeah.
So with this AMD option strategy, how much leverage are we talking about here?
Well, with that 2x leverage built into AMDL and the added leverage from the option, you could be looking at a total leverage of around 10x.
Wow, 10x. That's intense. I can see why this is an advanced strategy. With that much leverage, position sizing has got to be, absolutely critical.
Absolutely, you got it. So let's walk through the report's example. Let's say you have $50,000 to dedicate to short-term trades. The report wisely advises limiting your risk per position to just 2%.
So that means, the maximum you should risk on any single trade, even one that could be as lucrative as this, is only $1,000. Is that right?
Right, and since each of these AMD option contracts cost around $560, you can technically afford to buy 1.78 units.
Right, but you can't buy fractions of contracts. So really, you should only buy one or two in this scenario to stay within your risk limit.
Precisely. And this disciplined approach to position sizing, even when you're tempted to just go all in, is just so crucial for staying in the game long term. It's not about hitting those home runs every time. It's about managing your risk effectively and letting those winners run when you catch a favorable trend.
Love that. It's like it's a marathon, not a sprint. But before we get, too carried away.
Remember, this is just one example, and options trading can get, really complex. This report provides a framework, but it's always your responsibility to do your own research, to understand your own personal risk tolerance, and to never invest more than you can afford to lose.
Absolutely. It's so important to remember that. Now, this entire deep dive has been focused on, U.S. stocks. But what about other asset classes? Could these leverage principles apply to real estate or even starting a business?
That's that's a fascinating question, and it's something that we'll explore right after a quick break.
Yeah, that's a great point. We've been really focused on the stock market, but the idea of leverage, it really does. It pops up everywhere if you just know where to look.
It does, for sure. Think about real estate. I mean, a mortgage is basically a form of leverage. Right, you're borrowing a big chunk of money to control an asset that's worth way more than what you put down initially.
Oh yeah, that's true. And if if those property values go up, your returns get they get amplified. But on the flip side, if the market takes a dip,
yeah, you could end up owing more on that mortgage than the property's actually worth. It's that same principle of magnified gains and losses that we see with leveraged stocks.
So just like in the stock market, it seems like careful risk assessment and really understanding your own financial situation is absolutely crucial in real estate.
Absolutely. And what else is interesting? That concept of leverage, it even applies to starting a business.
Yeah.
You're investing your time, your energy, and often some initial capital to build something that hopefully will grow exponentially.
I like that. It's almost like you're using, you're using your own skills and resources as leverage to create something much bigger than yourself.
Exactly. But just like with any leverage strategy, there are inherent risks. I mean, your business, it might not take off, or you might need to invest way more than you initially planned, or you might run into some unexpected challenges.
Right. But the potential rewards, both financially and in terms of, just that personal satisfaction, those can be huge.
That's the trade-off with leverage, right? You're essentially magnifying your potential outcomes, both good and bad, which is why the report's emphasis on risk management is so important, regardless of what you're investing in.
Yeah, I totally agree. It's like that common thread, that runs through all these different strategies and applications of leverage.
Exactly. So while this deep dive has primarily been about the mechanics of leverage in the stock market, these underlying principles they're really relevant to so many areas of life. It's about understanding how to use borrowed resources strategically, whether that's money, time, or even skills to really achieve your goals.
No, that's a powerful takeaway. This concept goes way beyond just Wall Street. It's about thinking bigger and understanding how leverage can really work for you, in so many different contexts.
Absolutely. But always remember, with greater potential comes greater responsibilities.
Yeah.
Informed decision making, calculated risk taking, and a crystal clear understanding of the potential downsides. Those are really, those are the keys to using leverage effectively and responsibly.
Couldn't have said it better myself. I think we've covered a ton of ground today. From those, nuanced psychological factors to, specific trading tactics. It's been quite a journey.
It really has.
And for all of you listening out there, here's a final thought to chew on. We've talked about leverage in finance and investing, but where else does this concept show up in your life?
Yeah. Are you leveraging your network to find a new job? Are you using technology to automate tasks and free up your time?
Ooh, I like that. Exactly. Where are you using those borrowed resources, those tools and strategies to really, magnify your potential? Think about it. It's something to explore until our next deep dive. I'm already pondering. This has been a really insightful deep dive into the world of leverage. Thanks for joining us on this journey.
It's been my pleasure.
And to all our listeners, until next time, keep exploring, keep learning, and keep leveraging your way to success. All right, so we've explored leverage in the stock market, and even kind of big picture stuff like real estate and starting a business. But I'm curious, are there any other like surprising places where this idea of leverage kind of pops up in our lives?
Oh yeah, definitely. Leverage is it's more common than you might think. It's really all about finding ways to amplify your efforts, to amplify your results, and sometimes that means getting a little creative.
Okay, I'm intrigued. Give me an example. How does that work?
Well, think about networking. Building a strong network it's like creating leverage for your career. Those connections you make, the relationships you cultivate, they can open doors. They introduce you to new opportunities, and they can help you achieve your goals, those professional goals, but faster than going it alone.
Yeah, I see what you mean. It's like you're tapping into this collective knowledge, right? The experience and the influence of your network instead of just relying on your own resources.
Right, exactly. And here's another example. Technology. Think about all the tools and platforms we have, these days. Using technology effectively it's like leveraging your time and energy. You can automate tasks. You can streamline those processes, and really just free yourself up to focus on those higher value activities.
Yeah, that's so true. I mean, can you imagine trying to run a business today without, without email, without like project management software or social media? It'd be like swimming upstream.
Exactly. Technology, it really empowers us to do more with less, to multiply our output without necessarily working harder. It's leverage in action.
Yeah. This is making me realize how pervasive this whole concept of leverage really is. It's not just about, like financial instruments or complex strategies. It's a mindset. It's a way of thinking about how to maximize your potential no matter what you're doing.
That's a great way to put it. It's about being resourceful, being strategic, and always looking for ways to amplify your impact. And whether you're trading stocks or you're building a business or even just navigating, your everyday life, that leverage mindset can be incredibly powerful.
I'm so glad we took this deep dive into the world of leverage. It's not just about those financial gains. It's about understanding this this fundamental principle that can be applied in countless ways to really achieve our goals, whatever they may be.
It's been a real pleasure exploring these ideas with you.
And to all of you listening out there, thank you so much for joining us on this journey. Remember, leverage is all around you. Recognize it, use it wisely, and never stop looking for those opportunities to amplify your efforts and really create the life you want. Until next time.